Apart from their concerns about interest rates, which now seem to have topped, the most common concern that property investors are mentioning to me lately is they're wondering, is Australia going to have a property crash similar to that experienced in America? Now, this concern doesn't surprise me with much of what's written in the press. I guess what does surprise me is that some economists are still predicting a property crash in Australia, with some even suggesting the crash may be as significant as that in America. Well, let me tell you my thoughts. Yes, Australia is going to have a property crash, but it's not going to be this time round. Now, why do I say a crash will happen one day, sometime in the future? Because that's what happens with property cycles. At some time in the future, fear and greed will drive our markets to unsustainable highs. But currently, the fundamentals of supply and demand should continue to see property prices in most Australian capital cities start moving upwards over the medium to long term. And in the meantime, rentals are going to skyrocket. Now, global house prices have soared over the last 10 years in what The Economist magazine has dubbed the greatest bubble in history. Let's have a look what happened to house price growth over the last 10 years since around 1997. In South Africa, prices increased 400%. In Ireland and Britain, they went up over 200%. Australian house prices went up 174% in the last 10 years. In the United States, they went up about 138%, and in New Zealand, 125%. Interestingly, in Hong Kong and Japan, house prices fell about 22 and 33% respectively. Now, interestingly, I've read similar commentary from the Economist magazine year after year in those last 10 years when they say property prices are going to crash, but instead they've been increasing. Now, I guess the Economist could come back with an argument saying, well, yes, the bubble's just getting bigger and bigger, which means Australia's heading for a bigger property crash, just like overseas. In my Understand What's Really Happening in Our Property Market seminars, top property tax accountant Ed Chan, co-founder of Chan & Naylor Accountants, and I will be explaining all this in much, much more detail to you and show you how you can exploit the opportunities that property markets will present over the coming years. I'm also going to spend a bit of time teaching you about how to get started in property investment and how to get started in property development. We're going to be conducting these seminars around Australia in August and September. So please click on the link below to find out more and reserve your place to join us. Okay, back to why I think the differences between Australia and America are so different we are not going to have a crash. Look, there's no doubt that there's been a collapse of property values in America. In Los Angeles and Santiago, property values have dropped more than 25%, and in Miami and Las Vegas I've read they've dropped more than 30%. So why don't I think house prices in Melbourne, Sydney, Brisbane, Canberra, Adelaide and Perth are going to drop significantly? Especially if you look at the figures I quoted a few minutes ago and see that house prices in Australia actually rose further than those in the United States during those last 10 bubble years. Well, in some areas, and in particular Sydney's southwestern suburbs, some homes, individual homes, bought at the height of the boom in 2003 have actually resold at 30% losses. And some commentators are suggesting this could happen in other areas of Australia. However, I'm of a different view, and many property analysts I respect believe the same. The current property fundamentals, including our strong economy and the chronic shortage of housing, are going to insulate Australia from a property crash. There are reports of something like 1.1 million homes empty in America for sale or rent. I've even heard reports that there are up to 8 million houses. Australia doesn't have suburbs full of empty houses awaiting mortgagee sales. Instead, we're not building enough houses. While we need something like 200,000 new homes each year to supply accommodation for our growing population, we're only building in the order of 145,000 new dwellings. Now, another big difference between Australia and America is the way they handle their home loans. Here, homeowners have to personally guarantee their loans. In America, they have what we call non-recourse lending, which means you don't personally guarantee the loans, which of course encourages borrowers to walk away and hand in their keys if property values fall. From a supply and demand perspective, America is overbuilt. There are just too many houses. In Australia, it's the exact opposite. We're not building enough houses and our vacancy rates are at historic lows. Sure, many Australians are currently having issues with housing affordability and are putting off their home buying decisions. But people still need a roof over their heads. People are still getting married and people are still getting divorced, and others just have to move house because of their jobs. If they can't afford to buy a house, what are they going to do? Of course, they're going to rent one. And currently, with vacancy rates at historic lows, putting all this together means that rents are going to boom. We're going to have rising rents over the next couple of years. More and more property commentators now seem to agree our house prices will hold up. BIS Rapnel property analyst Angie Zagamanis has recently been reported as saying that in the medium term, as interest rates stop rising and as housing shortages become more acute, property prices will start rising. Similarly, ANZ Bank economist Alex Joyner explained that the chronic shortage of houses would push up house prices and also rentals. And another report from Tim Lawless, National Research Director of RP Data, was quoted as saying, "I think that the undersupply will put a floor on property prices. As the prospect of interest rate cuts come, demand for properties will rise." But our property markets have changed. Don't expect the type of capital growth many of us enjoyed in 2006 and 2007. And even though interest rates have topped, I don't think they're going to come down anywhere near as quickly as some commentators will suggest. The Reserve Bank has put speed bumps on the road on purpose. They're slowing our economy on purpose. What this means is that buying any property and hoping it'll make a good investment just won't work anymore, not in this new era of property. Now's the time to buy well in an area that will outperform the averages and buy properties to which you can add value. In my Understand What's Really Happening in Our Property Market seminars, Australia's leading property tax accountant Ed Chan and I will show you how to exploit the opportunities the property markets are going to be presenting us over the next couple of years. Ed will show you how you can protect the assets you've already got, and I'm going to be explaining a bit about how to get started in investing, and for the more advanced investors, I'm going to give you some insights on how to get started in property renovations and property development. I'm definitely going to be discussing things that we haven't discussed at seminars like this before. So this is the last time Ed and I are going to be getting together until well into next year. The last time we're going to be speaking on the public platform. Our timetables are just too busy. So click on the links below, find out where we are in your state now, while it's fresh in your mind, read all the details about our seminars, and come and see us at our Understand What's Really Happening in Our Property Markets seminars.